Welcome to the Money Major channel. Today you are going to learn everything you need to know to start investing in real estate. I will cover everything that you need to know. Let's get right to it. Are you afraid of missing out on financial freedom? Imagine waking up each day knowing that your financial future is secure, that your investments are working tirelessly for you, and that you have the freedom to pursue your passions without the constant worry of financial constraints. Imagine a life where your money works for you, not the other way around. Picture yourself enjoying more quality time with your loved ones, traveling to your dream destinations, or simply having the peace of mind that comes with financial stability. That's the power of real estate investing. It's not just about buying properties. It's about creating a sustainable and profitable investment strategy that can provide long-term benefits. It's a proven path to building wealth, creating passive income streams, and achieving lasting financial stability. Real estate has been a cornerstone of wealth building for centuries, offering a tangible and reliable asset that can appreciate over time. Now you might be thinking, real estate? That's for seasoned investors with deep pockets, right? It's a common misconception that only the wealthy can benefit from real estate investments. Wrong. Real estate investing is accessible to everyone, from seasoned pros to ambitious beginners like you. With the right knowledge and tools, anyone can start their journey in real estate, regardless of their financial background. Whether you're looking to generate extra cash flow each month or seeking a steady income stream that can supplement your current earnings, real estate offers numerous opportunities. Plan for a comfortable retirement where you can enjoy your golden years without financial stress. Real estate can provide a reliable source of income that can support your lifestyle and help you achieve your retirement goals, or simply diversify your investment portfolio to mitigate risks and enhance returns. By including real estate in your investment mix, you can balance the volatility of other assets and create a more resilient financial strategy. Real estate offers something for everyone. From residential properties to commercial buildings, there are countless ways to invest and grow your wealth. This guide will equip you with the knowledge and confidence to take those first crucial steps into the exciting world of real estate investing. You'll learn about different investment strategies, how to analyze properties, and the best practices for managing your investments. We'll demystify the process, break down complex concepts into bite-sized pieces, and provide actionable advice to set you on the path to success. Our goal is to make real estate investing approachable and achievable for everyone. So buckle up and get ready to unlock the incredible wealth-building potential of real estate investing. With the right mindset and the right guidance, you can turn your real estate dreams into reality and build a prosperous future for yourself and your family. The best way to invest in real estate depends on your financial goals, time commitment, risk tolerance, and level of expertise. Here's a breakdown of some of the most popular and effective ways to invest in real estate, along with insights to help you choose the right approach. Rental properties. Buy residential properties, rent them out, and earn steady monthly cash flow from tenants. Pros include passive income, property appreciation, and tax benefits. Cons involve property management and maintenance. Real estate investment trusts, REITs. Invest in companies that own, operate, or finance income-generating real estate. Pros are high liquidity and diversification. Cons include limited control and stock market volatility. House flipping. Buy undervalued properties, renovate them, and sell for a profit. Pros are high returns in a short time. Cons are high risk and significant time and expertise required. Real estate crowdfunding. Pool money with other investors to invest in large projects. Pros are lower capital requirements and access to high-value properties. Cons are less control and lower liquidity. Short-term rentals. Buy properties in high-demand areas and rent them out as vacation rentals. Pros are high rental income during peak seasons. Cons are frequent management and local regulations. Multifamily properties. Purchase multi-unit properties for multiple rental incomes. Pros are economies of scale and lower risk of total vacancy. Cons are higher upfront cost and more maintenance. Real estate syndications. Group of investors pool resources for larger projects. Pros are access to large-scale projects without hands-on involvement. Cons are less control and limited liquidity. Real estate development. Buy land or undervalued properties, develop them, and sell or rent. Pros are high return potential. Cons are complexity, high capital, and high risk. Which option is best for you? For passive income, consider rental properties, REITs, and multifamily properties. For beginners, REITs and crowdfunding platforms offer easy entry. For high returns, house flipping and development projects are ideal. For wealth building, rental properties and multifamily investments are excellent. Ultimately, the best method depends on your financial goals, available capital, time commitment, and comfort with risk. Starting with smaller, manageable investments can help you build confidence and knowledge in real estate before moving into larger, more complex ventures. Okay, let's talk about the benefits. Why choose real estate over other investment options? Here's the inside scoop on why real estate truly shines. Cash flow. Imagine money flowing into your account every month, even while you sleep. Rental properties can generate consistent cash flow, providing you with a steady stream of passive income. Appreciation. Real estate values tend to appreciate over time, meaning your investment grows in value. It's like watching your money make more money. Tax advantages. The government loves real estate investors. You can enjoy tax benefits like deductions for mortgage interest, property taxes, and depreciation. Leveraged real estate allows you to use borrowed money, a mortgage, to purchase an asset. This leverage can amplify your returns, helping you build wealth faster. Convinced yet? We're just getting started. The world of real estate investing is like a buffet. There's something for everyone. Just like a buffet offers a variety of dishes to cater to different tastes and preferences, the real estate market provides a range of investment opportunities to suit various financial goals and risk appetites. Let's explore some popular options in the real estate investment landscape, each with its unique advantages and challenges. Residential rental properties. This is the bread and butter of real estate investing. You buy a house, apartment, or condo and rent it out to tenants for a steady monthly income. Residential properties are often considered a stable investment because people always need a place to live. The demand for rental housing can provide a reliable income stream, and over time, the property may appreciate in value, adding to your overall return on investment. Commercial real estate. Think office buildings, retail spaces, or warehouses. Commercial properties can offer higher rental income, but often require more upfront investment. These properties are typically leased to businesses, which can result in longer lease terms and potentially less turnover compared to residential properties. However, the initial cost and ongoing maintenance can be higher, and the success of your investment may be closely tied to the economic health of the business sector. REITs. Want to invest in real estate without the hassle of being a landlord? Real estate investment trusts, REITs, allow you to invest in a portfolio of properties through the stock market. REITs can be a great way to diversify your investment portfolio and gain exposure to real estate without the need to manage physical properties. They often pay dividends, providing a regular income stream, and can be bought and sold like stocks, offering liquidity that direct property investments lack. House flipping. This strategy involves buying undervalued properties, fixing them up, and selling them for a profit. It can be lucrative but requires construction knowledge and a tolerance for risk. Successful house flipping depends on accurately estimating renovation costs and the potential resale value. It also requires a good understanding of the local real estate market to identify properties with the best profit potential. While the rewards can be high, so can the risks, especially if the market conditions change unexpectedly. Short-term rentals. Platforms like Airbnb have made it easier than ever to rent out your property for short periods. This can be a great way to generate higher income, especially in tourist destinations. Short-term rentals can offer flexibility and the potential for higher nightly rates compared to long-term leases. However, they also require more active management, including frequent cleaning, guest communication, and handling bookings. Additionally, local regulations and market demand can significantly impact the profitability of short-term rental properties. Don't feel overwhelmed. We'll delve deeper into each of these strategies in future chapters. Understanding the nuances of each investment type will help you make informed decisions and develop a strategy that aligns with your personal goals and circumstances. Whether you're looking for steady income, long-term growth, or a combination of both, there's a real estate niche that can meet your needs. Remember, the key is to find an investment approach that aligns with your financial goals, risk tolerance, and lifestyle. Take the time to research and consider what type of real estate investment suits you best. Whether you're a hands-on investor who enjoys managing properties or someone who prefers a more passive approach, there's a niche in the real estate market that can help you achieve your financial objectives. Stay tuned as we explore these options in greater detail, providing you with the knowledge and tools to succeed in your real estate investment journey. You need to hear this if you're a real estate investor. Ready to turn your real estate dreams into a reality? Whether you're a first-time investor or looking to expand your portfolio, the journey can be both exciting and daunting. But don't worry, we're here to guide you every step of the way. Here's your detailed step-by-step guide to get started, a comprehensive roadmap to help you navigate the complex world of real estate investing. 1. Set clear goals. What do you want to achieve through real estate investing? It's crucial to have a clear vision. Are you looking to generate passive income, save for retirement, or build long-term wealth? Maybe you want to diversify your investment portfolio or secure a financial future for your family. Write down your goals and keep them in mind as you move forward. For example, if your goal is to generate $2,000 in monthly passive income, calculate how many properties you need to achieve that. Define your financial goals, such as generating passive income, saving for retirement, or building long-term wealth. Consider how much time and money you can realistically invest. This will help you stay focused and make informed decisions. For instance, if you can invest $50,000 up front, determine how this will impact your property choices and financing options. 2. Educate yourself. Knowledge is power. The more you know, the better prepared you'll be. Read books like Rich Dad, Poor Dad by Robert Kiyosaki. Attend seminars. Listen to podcasts such as Bigger Pockets Real Estate Podcast, and connect with experienced investors to learn the ins and outs of real estate. There are countless resources available, from online courses to local meetups. Take advantage of them to build your knowledge base, and connect with experienced investors to learn the ins and outs of real estate. Networking is key. Join real estate investment groups, attend industry events, and don't be afraid to ask questions. The insights you gain from seasoned investors can be invaluable. For example, attending a local real estate meetup can provide you with contacts who can offer advice and potential partnership opportunities. 3. Secure financing. Unless you're sitting on a pile of cash, you'll likely need a mortgage to finance your investment property. Understanding your financing options is crucial. For example, consider whether a conventional loan, FHA loan, or a hard money loan is best for your situation. You'll likely need a mortgage to finance your investment property. Shop around for the best rates and terms. Speak with multiple lenders to understand your options and find the best deal. Don't forget to consider additional costs like closing fees and property taxes. For instance, if one lender offers a lower interest rate but higher closing costs, calculate the total cost over the life of the loan to make an informed decision. Shop around for the best rates and terms. Compare different mortgage products and choose the one that aligns with your financial goals. A good mortgage broker can help you navigate this process and find the best fit for your needs. For example, a broker might help you find a lender who offers favorable terms for investment properties. 4. Choose your market. Location, location, location. The right market can make or break your investment. Research different markets to identify areas with strong rental demand, job growth, and potential for appreciation. Look for neighborhoods with good schools, low crime rates, and amenities that attract tenants. For example, a city with a growing tech industry might offer better long-term appreciation potential. Research different markets to identify areas with strong rental demand, job growth, and potential for appreciation. Use online tools and resources to analyze market trends and data. Consider factors like population growth, economic stability, and future development plans. For instance, websites like Zillow and Redfin offer market analysis tools that can help you identify promising areas. 5. Analyze properties. Don't just fall in love with a pretty facade. Analyze potential properties carefully, considering factors like rental income potential, expenses, and neighborhood trends. Look at comparable properties in the area to get a sense of market value. For example, if similar properties in the area rent for $1,500 per month, use this as a benchmark for your rental income projections. Considering factors like rental income potential, expenses, and neighborhood trends, create a detailed analysis of each property, including projected income, expenses, and potential return on investment. This will help you make informed decisions and avoid costly mistakes. For instance, use a spreadsheet to track all potential expenses such as maintenance, property management fees, and insurance. 6. Make an offer. When you find a property that meets your criteria, it's time to make an offer. Be prepared to negotiate and don't be afraid to walk away if the deal doesn't meet your expectations. For example, if the seller is unwilling to lower the price to match your budget, consider looking for other properties. It's time to make an offer. Work with a real estate agent to craft a competitive offer that reflects the property's value and your investment goals. Remember, the initial offer is just the beginning of the negotiation process. For instance, you might start with an offer below the asking price to leave room for negotiation. Don't be afraid to negotiate. Negotiation is a critical skill in real estate investing. Be prepared to counteroffer and negotiate terms that work in your favor. This can include the purchase price, closing costs, and contingencies. For example, you might negotiate for the seller to cover some of the closing costs to reduce your upfront expenses. Stay tuned for the final steps in the next section. We're just getting started. In the next section, we'll cover the final steps to closing the deal and managing your investment property. Stay tuned and get ready to take your real estate investing to the next level. Ready to start your real estate journey? Subscribe now and get exclusive tips and tricks. See you next time, boss.